Well, I have made a lot of videos on volume inside the base, but still, some of you have been asking me more clarification about volume. So I said, why not make one video? So this is an old chart of Mazgaon Dock Shipping Company, right? As per regulations, I have to show you old charts. So this is September 2023 when it formed a nice base after which it broke out. But the breakout did not sustain for long, but it did go up significant amount in terms of percentage. We will look at the breakout candle, but I wanted to talk about the volume on individual candles inside the base. Okay. So first I want you to understand the difference between strong closing and weak closing. So if you look at any candle, say let's say I look at this candle, I place my cursor here. When you look at here, you have four values: open, high, low, and close. Okay. But there is one value missing there, which is the midpoint of the candle. Midpoint is high plus low divided by 2. Basically, the midpoint between the high and low. So when I click here and you see here, you don't see the midpoint value. Okay. So it's not given there. But that midpoint value is very important because that helps us determine whether it's a strong closing candle or a weak closing candle. So for example, if the closing is above the midpoint on that candle, that's a strong closing candle. And if the closing is below the midpoint of the candle, like for example here, that's a weak closing. Now, strong closing, weak closing does not depend on the color of the candle. Just because it is weak closing does not mean that it is going to be a red candle, or just because it is a strong closing does not mean that it is going to be a green candle. Sometimes you might have a red candle as well with a strong closing. So for example, let's look at this candle. Okay, it's a green candle. It's a strong closing because it is closing above the midpoint. Let's see. Let's see this candle. Okay, this candle. See, it's a green candle, but the closing is weak. It is below the midpoint of the candle. So, as I said earlier, it's the closing that matters. If you want to determine whether the candle has had a strong or a weak closing, it's not the color. So, ignore the color, focus on the closing. Okay, closing relative to the midpoint of the candle. Now, you don't have to measure the midpoint of the candle. It's very visible. Just looking at the candle, you can know it's closed above or closed weak, right? Sorry, closed strong or closed weak. So let's draw this base. So that's the nice base. How many points inside the base? I think by now you understand this. One, two, three, 4, 5, 6. 6 points inside the base. The buy point is in the green zone. Closing price is in the blue zone. Ideally, we would have preferred the buy point and the closing price to be in the green zone. But this is still fine. Slightly higher risk because after point 2, there is not a single candle that has closed inside the green zone. But looks like a very tight base. Even the distance between the high and the low, from here, high till the low. See, it's less than 20%. It's not a big deal, right? It's not that the stock has corrected like 50% or 40% from the top. So we have discussed strong closing and weak closing. But what about volume? Okay, volume and price are two independent variables. So look at this candle. It's a strong closing, high volume candle. High volume means the volume bar should be above the blue line, the moving average. Low volume means the volume bar is below the blue line, like here it is low volume. And average volume means the volume bar is at the blue line. So that's average volume. So this candle has got average volume. So volume has high and low basically. Average rarely comes, but it's basically high or low, and closing is strong and weak. So how do you use this knowledge to determine what is happening behind the curtain, right? Remember, I had told you earlier that the chart is the effect, it is not the cause. Okay, so let us look at four possible combinations of closing and volume. So let me go back to have a look at this table that I have prepared for you. So let's say the volume is high and the closing is strong. What does that indicate? That indicates demand. There is institutional demand coming in, because when the volume is high, some institutions are buying the stock probably in bulk, right? Otherwise, where will the volume come from? Generally, high volume comes from institutional participants, not retail participants. So have a look at this. Inside the base, you have this candle. It has a strong closing because the closing is above the midpoint of that candle, and the volume bar is above the blue line. So that is a high volume, strong closing candle. So this indicates demand. So institutions bought the stock on this day. Okay. Then low volume, strong closing. Okay. So the volume is less, but the price went up. Okay. That's a fake rally, right? Let's see if we can find a candle here. Yeah, I think this could be considered as strong closing, slightly above the midpoint. Okay. Or yeah, this could be considered as strong closing. Even this, yeah, this is strong closing. Look at this candle, green candle closing near the high of that candle. That means it's a rally. But have a look at volume. Okay, a rally on that day. Okay, if you open the intraday chart of that particular day, which is 28th of July 2023, when you open the 5-minute chart, you will see a rally, but that rally came on low volume, so that's a fake rally. Okay, after fake rally, generally the prices come down because there was not enough power in that rally. See, in this case there is buying power from institutions. So remember, high volume, strong closing represents institutional demand. Low volume, strong closing represents a fake rally. Okay, here we are looking at candle by candle, and then I will sum up everything, and I will help you understand what we should expect inside the base. Okay. Then you have high volume, weak closing. Okay. So high volume, let's see, this is, yeah, see this candle. No, this candle is strong closing on high volume. See, the closing is at or above the midpoint. Okay. So remember, I told you the color does not matter. So this is high volume, strong closing. This might be a red candle, but actually on that day, people bought the stock. Okay. So this is not high volume, weak closing. This candle is not high volume, weak closing because the volume is low. Even this candle is not high volume, weak closing because the volume is low. Have a look at this candle. Look at the volume above average, right? Look at the closing. Red candle closes near the low. This is high volume, weak closing. That is the day when probably some institutions have offloaded their shares in the market. Okay. That is high volume, weak closing. So that is supply coming in. Big supply coming in from the institutions. Then low volume, weak closing. Institutions are not selling. This is very, very important. If you are using this system, this is very important for you to understand. Okay. Low volume, weak closing. Look at this candle, weak closing. Look at this candle, weak closing. All of these are weak closing candles, but look at the volume. Volume is low. Okay. What does that mean? It means institutions are not selling. It means the shares are going from the hands of retail participants to institutional participants. That is what we want to see in a stage 2 uptrending stock inside a base. Okay. So this is ideal. You need to understand this, which is demand, And you need to understand this. These are the two types of candles: high volume, strong closing, which indicates demand; low volume, weak closing, which represents that institutions are not selling. That is what we want inside the base. Okay. The more the number of candles like this, out of these two, this one and this one, okay, the more the number of these types of candle, the better is the base. Now, I am not asking you to count the number of candles in the base and mark, give a name to each candle from these four terms that I have mentioned here. That would be too time consuming, too tedious. But overall, when you look at the base, you understand that it is tilted more towards high volume, strong closing candles or low volume, weak closing candles, right? If it is low volume, strong closing, then that's probably a fake rally, okay, inside the base. We don't want this type of candle inside the base. If there is high volume, weak closing, then there is supply. We don't want this type of candle inside the base. So these two types of candles in the base, the lesser the better. And these two types of candles inside the base, the more the better. Okay, now you understand why I am trying to discuss individual candles here. Okay, so coming back to this base, so that's the yellow line. The high of this candle is 987.85. So let's draw this 987.85. That's the buy point. So next day, see on the breakout, what do you expect? Which type of candle do you expect? High volume, strong closing, right? Demand. Look what happens. See, very high volume, strong closing, closes above the midpoint of the base. High volume, strong closing candle represents demand. Now look at the immediate next candle. Look what happens here. Now this is super high volume, even higher than this. But what about the closing? Remember, I talked about color doesn't matter. Look here, color doesn't matter. Where is the closing? The closing is near the low of the candle, right? And high volume. So high volume, weak closing indicates supply. So probably after this, the price would have probably started to fall. If you want to see, look here. You see, it started another base. So this candle represents high volume, weak closing. High volume, weak closing just after a breakout outside the base. What does that tell you? Probably you will have to reduce your position size. Otherwise, I showed you what happened after that. You might get stuck in the stock for 2-3 weeks. I just showed you 10-15 candles, right? That's like 2-3 weeks. You get stuck in the stock. So, although there is a rising window here, which is a positive sign, but high volume, weak closing indicates supply coming into the market. Probably people who bought here sold their holdings here to get out of that stock, right? So, this is how you look at individual candles and try to determine what is happening behind the curtain. Look inside the base. Inside the base, most of the candles are low volume. Okay. And most of the candles are weak closing, which means institutions are not selling, right? That is ideally what we want to see. Remember, which are the two types of candles we want to see? High volume, strong closing, low volume, weak closing. Okay. If it is low volume, strong closing, that's a fake rally. If it's a high volume, weak closing, that indicates supply. We don't want that to happen. Okay. Inside the base. So if you notice this stock, it shot up like 25% in 2 days. 25% in 2 days. So you need to understand how to analyze the base to catch these types of breakouts. Okay. Now, in this case, if you notice, the buy point was in the green zone, the closing price was in the blue zone. So it's slightly risky. If both of them have been in the green zone, that would have been great. But even in spite of the fact that it was risky, it still shot up 25% in 2 days. That's the power of the stock breakouts. When a stock breaks out on unusually high volume, this is like 400%, 300% more volume than average. This is like 400, 500% more than average volume, right? When such kind of extraordinary volume starts to come, you have to be alert. So you have to put alerts on stocks and see whether extraordinary volume is coming in or not. And you can take a position in such cases. So in this video, I hope volume is clear to you. In this video, I have spoken about volume for individual candles. There was an earlier video in which I spoke about three steps. Step number one is high volume rally. So this is high volume rally. This is all high volume rally. Step number two is low volume consolidation. This is low volume consolidation. And step number three is high volume breakout. So that is volume on a broad chart level. Today we discussed volume on a micro granular level. This much, if you understand about volume, it is more than enough. You don't have to be an expert on candlesticks or bar charts to understand volume. This much understanding of volume, one macro and one micro, it is more than enough. Thank you so much.